Hello, everyone. Wish you all a very happy financial new year. I hope the first day of the financial new year went on great for you all. Uh, those of you who have been for part of my Telegram channel, we have been discussing a lot of things over there, and we held a bearish view and also considered a possibility of an upside move owing to the retracements because of the fall that has happened over the last few weeks to 1 month or more, right? Um, Today we are going to explore what is that is likely to happen, what are the likely scenarios, and how you can plan for tomorrow, as well as for the positional, things that we carry, right? How do we protect our capital? That's one of the main concerns. So let's get started and start off with the Bank Nifty. It's better that we see the overall trend in the past, what has happened. Market was, you know, consolidating at this levels. Even before that, there was a straight fall from about 44K levels, where the peak of Bank Nifty was made sometime in December. From then, it consolidated for some time. It tried to break this zone and then retraced. It was playing in with between these zones for some time, and finally it decided to break towards the end of January. And there was a bounce to this level, 40K level, and then there was a retracement again. It was playing between the ranges, right? For some time it consolidated, then again it entered multiple times that it tried, and then finally it broke 40K in the month of March. So again, it went all the way down to 38,626. I mean, 626, and from there we had a retracement. Again, it is bouncing back to this territory. Now, what can we expect? Right, that's a very important question. A lot of people have been, extremely directional, strictly going only with PE positions alone. But there are certain things that you should keep in mind. See, if you're an option buyer, you are taking a risk that is many folds higher than an option writer or a person who is buying options with edges. So, if you're solely buying on PE, then the only way that you can win is when the market goes down, right? But market did not have to listen to your positions. Market will act upon what is needed for it to make bigger money for the big players. So that's how the big players adjust their positions, right? So you need to understand being purely directional will be hurtful in the long run, particularly if you don't have any sort of hedges for your positions. And considering the VIX that's falling consistently, although it went up all the way to 16 points, certain 7 or 8, something like that, but again it entered back into this 12 point something territory right now. Uh, what can happen is potentially the premium erosion will be at its peak. Whenever the VIX falls below 13, the premium erosion will be extremely high, right? You even if you're a CE holder or a PE holder, the more the market stagnates at one place, even for few minutes, let's say about 10 minutes it consolidates, you are bound to lose some premium, and that is going to be like really hurting our positions on an intraday basis, for which you will do more averaging. Again, that will enter into a losing trade, and eventually it will become a bigger loss. So one of the things to keep in mind is not to take any sort of positions on a weekly basis, rather switch to month end contracts. Since May month has, I mean, April month has already started and we have lost close to 4 days and a lot of holidays are there, I would suggest people to go with next month end contract, right? Every time during the live stream as well as in my Telegram channel, I always suggest people to go with the month end strikes for the simple reason, as an option buyer, it's your duty to protect your capital. And the only way that you can do it is by taking longer expiry strikes, right? Longer expiry, contracts. When you take those contracts, that is expiring in April 20, say May 25th or something like that. What can happen is, even if the market consolidates, something trading around 300 rupees, probably if it is trading there for about half an hour, it will lose premium. Of course, it will lose premium, but how much it would lose? Hardly some 2 rupees, 3 rupees of premium erosion would be there in a longer expiry contracts. Whereas the same position, if you're taking in April month, would lose somewhere close to about, say, 8 rupees or 10 rupees. Weekly expiry would lose like 15 rupees. The closer it is to the expiry, the faster will be the erosion. Understand the basics of it, right? So before even we get into the trade setup for tomorrow, these are the things to keep in mind. It is your responsibility to handle and make adjustments for your positions. Yes, we do live stream. Somebody asks, can I enter here? Yes, you can enter. I don't know your portfolio size. I don't know your risk appetite. I don't know your way of managing your funds. A lot of things can be done, whether you have the capital to write or you have the capital to do furthermore averaging. I have no idea, right? So I basis which don't take position. Just because I say that yes, you can enter here doesn't mean that you should enter there. It's only an interpretation of the market that I do on a live market. So what you can do is, preferably, this is the suggestion I would give. You can, if you want to play both the directions, then you can initiate long straddles, because what I am seeing is market is about to give another 1,000 points of move in coming days, right? Very clearly it is going to make another 1,000 points of move. Why do I say that? Because we are stuck in between these two ranges, and the market is having some sort of upward thrust. You can see that the pull is so fast with a lot of gap ups, and then again it rallied here. And why I am saying that it might even try going higher is this was one of the critical levels where the market shouldn't have broken, right? And market rightly fought here for almost an hour, like 40,800. This is in the live stream. I mentioned that this will be a serious point of reversal. But what happened was there was exactly some sort of fight going on, but eventually, towards the end of the day, it broke that and sustained and closed here. Now, scenario is that if there is any sort of gap up further, then this level is clearly taken out, and the next levels are at 41,500. In between there is 41,220 level, which is a very, very critical reversal point. I will not discount that, but to give the real scenario, because I cannot be talking only about the immediate levels alone, you should also see that market can go till 41,550, 41,800. Till this, we can say that it is a retracement move. What is a retracement move, right? When the market has fallen so much from the peak, right, from here, it has fallen so much that according to Fibonacci, market will retrace to certain levels. And what are those levels? 38%, 50%, and 61.8%. So the 61.8% from here is somewhere around 42K, right? I would say 41,800, but then 42K, you can expect it to retrace. But that is too long, right? Like another, that is about 1,200 points. So isn't it bullish? No. When you talk about the context of long term, these are retracements and not bullishness. Okay, it has the potential to go there. Doesn't mean that it should go there. Okay, understand the difference. Having a possibility of going there is one thing. Surely going there is another thing, right? If it is an uptrend, then we can say that yeah, the trend is continuing. The next level of target is this. That's a different story. But we are talking about retracements. Retracements are not mandatory, right? So unless otherwise there is some sort of gap, like you see there is a gap here. Now this gap can be filled. The market will use this opportunity to fill this gap, right? So these sort of things would be possible. That's why a retracement happens, just to fill the positional gaps that exist in the time frame that you check, right? So first thing to keep in mind is the ranges. We are expecting a retracement levels up to I would say 41,500 or 41,800 levels. This band is where I am seeing market can retrace up to in a long term perspective. right? But if it continues to go down, then immediate targets are like breaching this 40K, 39,600, and then subsequently 39,300 is one of the critical areas. And as it breaks, we can expect it to fall as low as 37,500 levels. Okay, so that sort of moves are possible, right? I am talking about in a longer time frame. That's why we are playing positional, playing at the month end contracts, maybe April month end and then May month end. These are the contracts that we play, right? So keep that perspective in place. Now let's talk about the intraday setup. On an intraday basis, you can expect a flat opening, particularly the market is coming from a holiday. You can expect a flat opening and then probably plus or minus 100, 150 rupees it will play, so that the premium erosion will be at its peak and then the market would rally upwards or break down, whatever can happen, right? But I am expecting usually some sort of first 1 hour to 2 hours of consolidation within 150 points, upside or downside. So that's one possibility, right? Uh, or if there is any sort of gap up opening and then straight away it is opening at say 41K, there is a potential reversal. Okay, at that level there is a potential reversal. So in that case, what you need to do is, if there is any sort of gap up, if you have capital, say that you wanted to buy a put option and you wanted to protect your position, maybe because market, what if it continues to go up, right? So if you want to buy a put option, buy this, and then also go and write LT7 puts, just to edge your position. Okay, you bought a put around 41K, 40K put you start writing. Otherwise, if the market stays there, you will be losing on the premium, right? So you need to have some sort of backup plan, right? Keep that in mind. Uh, Second of all, what happens once it opens at 40K? You need to sit and watch for some more time. And once it reaches 41,200, I am extremely anticipating it to be, bears will try to attack the maximum around 41,220 levels. So that is one area bears will not give up. And why the 220 levels? There is a analysis done in the past, and then I have a lot of zones were created around that level, and where it was a huge fighting zone. Okay, so that's one area where you can expect it to be fought very nicely. And this itself is a very strong area, and that's why market, having made this move, it struggled to break this 40,800. So I am still saying that it need not necessarily touch 41K, but then it shouldn't have closed above 40,800, in my opinion, if the bears have real control. But the other interesting scenario is, what if there is a gap down, right? And then all you need to do is let it fall, and the further it falls, you just keep adding some sort of P writings again at LT7 levels. If you are positionally holding some PE positions, say it is something that you got it around 400 rupees, currently it is at 200 rupees, or 150 rupees, something like that. As it comes down, probably it would have appreciated, like it would have become say 250. Now at least the 250 you need to protect, right? But you don't want to book that. In that case, what you can do is, this one trading around say 60 rupees or 50 rupees would have already become 100 rupees. You start writing this position, just save some 100 rupees into that, right? Likewise you can do, just if you are looking for some edges, I'm just recommending that. But purely if you want to play puts, then book 25 points in month end contracts. Book 25 points per trade. Don't oversize your position, don't keep on averaging. Look for positional edges. That's what I would suggest. And how what are unless, see, the edges are so many edges that can be done, and without knowing what sort of position that you hold, I cannot suggest the edges. But I can say that how you can take some precautionary measures once it comes down. When the PE value appreciates, you need to protect that, at least that much is saved. Ending a positional trade in no loss or no gain is a very good uh, success in itself. Getting out of losing trade and then making it into a no loss, no gain itself is a very big, achievement. So aspire for that, because we have all taken the month-end positions, and then if it is in loss, you should know how to get out of it. That will be a good learning experience, right? And positionally, what I am seeing is that there will be strong resistance at 41k, 41,200 on the higher side. So anytime that the market touches 41k and 41,200, you can go ahead and then take PE positions. On the downside, I don't see any sort of problem. Market, once it takes down 40,500 and then it moves below 40,450, it should continue to fall, and then there will be this level will be tested, that is 40k will be tested. Okay, uh, that is another thing. Plus, a lot of events and news are coming up, so we can't be really predicting the market directions. What market will do, only big players know and market knows. We are just here to interpret and then tap onto the moves that's happening in the market to our advantage, right? So know your role. Your role is to interpret the market and take advantage of it. You are not the market. You are not the big player. We are here to just tap the moves to our advantage, right? Next, don't be a writer. If you're pure writers, no, don't be a pure writer, because again we are expecting 1,000 points of breakout. Any side moves will hurt your positions badly. So that's the reason no writings. Intraday writings you can do, probably LT7 and UT7 you can write, and as it crosses LT4 on either side, you can square off your positions. That's one thing. Um, for safe positions, if at all you say that, okay, I want to book my losses, everything, and then I wanted to start fresh. I don't want to really be worried about whether the market stays or moves. I want to earn some money. And the best thing to do is that as the market opens, take a 450 rupees to 500 rupees premium of next month contract, next month, May month contract. Okay. C and PE, both somewhere between 450 to 500 rupees strikes. Just buy that. Okay. Leave it. Forget it for about next 10 days. Okay. Just forget it. Let the market make its move. Either side 1,000 point move happens, square off all the positions, or you want to do some hedging, that's all up to you. So that's how you can, lower your risk if you don't have the capital for writing or hedging. Right? So this is all the trade setup for tomorrow. Tomorrow, I'm expecting some sort of consolidation in the first half, and possible trend biased towards the upside. But what I'm also seeing is that this line, this blue line is a Fibonacci retracement, 0.618 levels from, long term. So this should be respected. If there is a gap down, then this will act as strong resistance, and then market might drag down. So I still feel that this could be a trap, and if there is a gap down, then we may continue to fall, right? But keep the mind open. Anything is possible, right? So that's about Bank Nifty. Let's do a Nifty analysis quickly. Nifty has entered into the zone after a long time. You see that it was consolidating in the zone for some time. Again, it was consolidating, and finally it broke, and then now it has re-entered. So that's why you will see it consolidating here for some more time, around 70 to 100 points plus or minus. You will see it trading because this is again a zone, supply zone. Now it will act as resistance zone. So this is a point where market might try to reverse, but then again, this is the kind of rally it has made. So same scenarios as I said for the Bank Nifty. Don't get into any sort of writings positionally, but intraday writings you can continue to do. You can go ahead and then write UT7 and LT7 levels, and then as it crosses UT3 or UT4 levels, you determine when you want to square off, book everything, exit it, because beyond that it should not be directional. Writing should not be there on an intraday basis. And if you are looking for any sort of opportunities on the CE side, then wait for it to clear UT2 level and then get that confirmation. Then you can enter into the CE side and then you can expect a strong, reversals around 17,800 levels. That's where you will find maximum resistance. Um, and on the downside, all it needs is to break the 17,300 levels. Once this level is taken out, then you can expect the market to come down. And then we gave a target of 16,800 some time back. It almost came and touched it, but then it bounced back. And if this was only a retracement and then it breaks this LT1, LT2 levels, for sure it will try to fill the gap, and then from there on the bearish sentiment continues. And again, we are not, we are not in a bullish territory yet. It is only a retracement. See from where the market has fallen. Market has fallen from a peak of almost like 19K, right? That is absolutely like too big move that it made. From there, if you see, this is only a retracement, and the possible retracements are up to 18K. It can retrace. Okay, till there it has the potential to retrace up to 18K. But does it mean that it will happen tomorrow or this week? Not really. Sure. There are a lot of news coming, and then probably the news based moves can take it that far. But until 18K is cleared, and then with the bank nifty 41,500, 41,800 is cleared, we are still in the bearish territory. Understand, positionally we are bearish. Okay. um, and it takes time, right, for market to just like that. It won't move 1,000 points every day, right? It has to. You can see what happens whenever there is a fall. Market consolidates for some time and then it moves. Here also you see it falls and then it consolidates for some time and then it bounces back and then it falls again. So this is one of the fall. Probably this is again a retracement and then it might continue to fall. So don't be disheartened if you're purely directional. Just make sure that you have some sort of hedges in place, right? So uh, for tomorrow, wait for UT1 or UT2 levels to be cleared. UT1 itself is good. If it clears and then sustains and makes newer high, you can get into the CE side. Even the same for you know Bank Nifty. But then Bank Nifty, I wouldn't suggest because of the high volatility. For Bank Nifty, we are going to be doing only contra. But for Nifty, we can still be directional on the upside. Um, One of the things, if you again, if you want to be really, not worrying about what is the market going to do in next 10 days, initiate a long straddle of May month end contract at the money, same, price, fees and fees that you buy, and that should be held for the next, 10 to 15 days. Let the news comes, let it make the move. As soon as it moves some, say, 500 points or more, then you will be in a profit and then just book that and then exit. Or if you want to do, if you know how to manage a long straddle, then go ahead and then do it. What you should not be doing is a short straddle. Okay, particularly in Bank Nifty, do not do a short straddle. It will prove very, very costly. Okay, you will lose big time. If you're doing a short straddle, you will lose big time. Don't get into short straddles for the initial first week. Let the news come and then let market perceive it, make its move, and then there will be a consolidation phase where we will do short straddle. Until then, hold on to long straddles, and that's the update. I know this is a bit longer video, but then this is the financial year's first video, so I wanted to make sure that all the details are captured, and then we are ready to face the market with complete picture. So all the very best for tomorrow, and I hope you make this a very profitable week. And see you all in the live stream. Take care, guys.